2022 June question paper 1R. On 31st 2022, Carmel's bank statement did not agree with her cash book balance. She identified that the following items on the bank statement had not been entered in the cash book. Jan 19th, direct debit. 27th, credit transfer. 29th, customer dishonored check. The green information appears on the credit side, whereas the yellow information appears on the debit side of the cash book. Now you can see the opening balance of the cash book indicates a balance brought down on the credit side worth 1,580. Now let's post the entries for the rest of the transactions, such as direct debit, credit transfer, and dishonored checks. On 19th, there's a direct debit from Vertigo. Direct debit, you can write the name of the person, Vertigo, worth 75 on the credit side. Because bank debits this value, therefore you enter this on the credit side of the cash book. Credit transfer on Jan 27th from Jax, 260 on the debit side. Whereas on 29th, a dishonored check from Booth and the value is 110. Now let's balance off the updated cash book. Figure out the total of the debit side and the credit side. Now let's find the debit side total, which is worth 260. Whereas the credit side total is 1,580, 75, 110. Let's total it up. 1580, 75, 1110 should give 1,765. As the credit side total is greater, write the credit side total. Let's transfer this to the total, 1,765. Now from that, let's deduct the lesser number side, worth 260. Jan 31st, balance carried down. Take the difference between 1,765 and 260. Which should give 370. Sorry, 1,505. Let's enter that amount on the debit side and then bring it to the credit side. Feb 1st, balance brought down 1,505. Now we have to prepare a bank reconciliation statement. First, you should understand the two different terminologies here: unpresented checks and outstanding lodgements. This is the format of a bank reconciliation statement. Let's post the closing balance of the cash book to the bank reconciliation statement. Now let's understand the terminologies of unpresented checks and outstanding lodgements. Now let's focus on unpresented checks. The cash book has credited the value, however the bank failed to debit. Checks entered in the cash book not yet presented for payment to the bank. Therefore, unpresented checks are added in the bank reconciliation statement. Outstanding lodgements. Let's have an understanding of cash sales banked on 31st 185. Outstanding lodgements are also called as uncredited checks or unrealized checks. Cash book is debited, however the bank failed to credit. Receipts entered in the cash book and banked that have not yet been processed by the bank. Unrealized checks or outstanding lodgements are deducted in the bank reconciliation statement. Now, let's post the entries to the bank reconciliation statement. This is the format of a bank reconciliation statement: balance as per cash book, add unpresented checks and deduct outstanding lodgements, and then you find out the balance as per bank statement. We already have the figure of the updated cash book, which is on the credit side. Therefore, you enter it within brackets 1,505. We had 2 unpresented checks in the question. Now let's enter those 2 information to the bank reconciliation statement. As you can see here, 66 and 350 worth are unpresented checks. 666 and 350. Total this up, add it in the next column. 416. Now let's figure out the outstanding lodgements or unrealized check on credited checks. This is worth 185. This needs to be deducted. Now let's find out the balance as per bank statement. Minus 1505 plus 416 minus 185 should give 1274. So it's a negative answer. Now let's work on the theory part. So we had prepared a cash book, updated cash book, and then a bank reconciliation statement. Explain to a business the advantages of preparing a bank reconciliation statement for 5 marks. Now, how do we answer this question? It's explain the advantages. So it's plural, 5 marks. So let's identify at least 2 advantages, a development for each. Point 1, development 1, point 2, development 2, and then you give a conclusion. Now let's draft the answer. You can take a while to do a quick research before answering this question. It helps a business to identify the errors which occurred in the cash book which is prepared by the business, or the errors that occurred in the bank statement. Now we need to add up a development for the point identified. So this error can occur in a cash book prepared by the business or by the bank statement. So development for this, by correcting these errors, helps a business to prepare financial statements or documents more accurately, because you're able to correct the errors. Now let's identify another identification followed by development. Point and the development is made. Now another identification followed by development. Think about another advantage. Try to give a development point for your second advantage. So I had taken here, it helps to avoid frauds. Adding a development point to this will be, this is because the bank is an external party who prepares the bank statement. Therefore, it's easier for a business to figure out if the accountant has made any fraud. Employees can make frauds, so you can identify the frauds. Once you're done with the development, now it's time to provide a conclusion. It helps to avoid frauds. This is because the bank is externally prepared by the bank. The bank statement is externally prepared by the bank, sorry for the error, which helps to identify any differences between cash book and the bank statement. Now, time for the conclusion. How can we conclude this answer? Start with a prompt in conclusion. It is important that businesses regularly compare the bank statement with the cash book it has prepared.